Hey everyone, hopefully you're having a good day, having a good, I guess, year. That's the last trading day of the year. I'm taping this December 30th, 2022. We're going to look at some information, kind of look at and recap some of 2022 using information from Twitter. And again, if you want to follow me on Twitter, it's at finding_finance. If you need any help with the upcoming commodity bull market that I think we're in, definitely sign up to finding-value.com. Use the word discount in the coupon code and get yourself a discount on the platinum memberships. So let's dive in. I'll give you my financial opinions here. Again, if you want to follow me at finding_finance. So we're going to start with the visualization of 2022 returns. We've got a lot of stuff in here that I'd like to cover. So what did well? Orange juice and heating oil. You're going to get yourself some rough rice. We had natural gas up 18.87%. Wait, I thought natural gas was tanking. On the year, it's up 18.87%. And that actually is what I chose to be the best performer of the year of 2022 was natural gas. And it ended up being one of the better performers. It was the best performer out of natural gas, oil. I don't know if they've got uranium on here. I think uranium was pretty close as well. Soybean meal. We've got corn there, soybeans, soybean oil. Platinum up at 12.17%. Go platinum. Crude oil is about 10.5% there. We've got cattle, the USD, crude oil, WTI, about 7%. Sugar, silver, 3.5%. Gold was basically flat on the year. We've got the euro down, the 2-year note down, Australian dollar down, palladium down. And I'm not a big fan of palladium when we're in this type of market environment, the high inflation. For some reason, palladium does very well with the overall stock markets. We've got Canadian dollar down, New Zealand dollar down, Dow Jones, the Nikkei, Japan, 5-year note, Japanese yen's that's taking it. 10-year note down 14%. Copper down 14.4%. S&P 500 down 19%. Russell 2000 21%. 30-year bond is down 22.28%. We've got cotton getting hit, coffee getting hit, ethanol, NASDAQ, oats, and then lumber. Lumber is the worst performer, at least on this chart, down 66%, but I also think that it went to very extreme levels on the upside. So there's that. We've got the 2022 market performance, basically summing it up. XLE up 56% for the oil majors. XOP, yeah, you know me, I get it. 38% there. OIH up 63%. Oil field services. And guess where we were on the website? Oil field services. And we've got a couple of companies that are doing incredible things. And then PSCE, which is the small E&P, is up about 41%. So coming on down, we've got silver versus the SPY. That's the S&P 500 ETF. If you were to look at this, it's basically a double bottom. It's slightly tilted to the right-hand side down here. So you get the lead-in pattern, one bottom, and then this is going to be the double bottom. I think we're going to break and move on up against stocks. I do think stocks could move sideways, potentially lower over a longer period of time. I'm not saying short term, but I think we're going to do that long grind sideways to grind lower in the overall stock markets while a lot of these commodities outperform in an inflationary environment with higher interest rates. So here's some pretty crazy stuff here. It says meet many globally that are against precious metals. Try to tell them to get their heads straight. So what he did is he looked at the precious metals against other currencies other than the dollar. He looked at TRY, Japanese yen, IDR, which is the Indonesian rupiah, and then Great Britain. It's up 1,405% 9 years against TRY. I can't remember what that one is. 410 against the yen, 2120 against the rupee and 550% against Great Britain in 15 years. Those are probably outperformance. Gold has outperformed the overall markets, and I think gold's going to continue to outperform the overall markets from the year 2000. So there's some pretty insane outperformance by a lump of metal. This is what the chart looks like if you want to see it from kind of the mid 2000s. Massive outperformance against the Japanese yen, massive outperformance against Tri, massive outperformance against Great Britain pound, and then massive outperformance against the Indonesian rupiah. And it looks like they're trying to break to the upside. Gold is again. So that just means that currency is being created at a faster pace than gold is being yanked out of the ground and available gold to be invested in. Here's that yield I was talking about. This is the 10-year yield. It says downtrend in yields has been decisively broken. Not a pretty picture for bond investors. It says a severe recession may be needed to restore bull market, basically to bring it back, yields all the way back down. Now, I don't know if that's possible, but you can see we're clearly out of this channel to the upside for yields on the 10-year yield. I do think that this will head higher even if we get a pullback here in the short term. Think of it as a breakout, pullback to do a retest, and then potentially a big move higher. We may or may not get that pullback. Here is moly prices, molybdenum. It's going vertical, and my bet is it runs to $40 per pound plus, and mining companies will be fighting to take over Greenland resources. Europe is simply screwed without moly. Their auto and steel industries, and there's the price here mid-2020, and it's going up quite dramatically. It's going vertical. I have a feeling that a lot of these base metals are going to have charts like this over the next 3-4 years. That's when the deficits start to hit, and it's on a wide variety of base metals. So what I do is I position before it, and then I just sit and wait for that to happen. It's pretty much that easy. I don't try to play the short term. I don't try trading in and out. I get into some really big dividend companies, and I just sit in it and get paid a dividend. And then if we get appreciation from the share price going up, that's great. And if it does go up and the metal prices go up, I'm going to get larger dividends as well. Here's 2022, the S&P 500 sector performances. Which sector do you think will have the best performance in 2023 and why? And this is what basically we've got here. We've got energy at 57.1%, utilities down, staples down, healthcare down, industrials, financials, materials all down, S&P 500 down 20%, real estate's down 29%, tech down, consumer discretionary, and communication service. What do I think is going to do well in 2023 and why? I think that we are going to see an outperformance of energy again. I don't think the underlying structural problems in the market are solved at all. Now, I'm going to kind of preface this with, I think energy is going to outperform in America. Henry Hub natural gas, I think, will end higher at the end of 2023 than it did at the beginning of 2022. And we're down quite a bit in natural gas off of its highs. I don't know what the natural gas outlook and energy outlook is going to necessarily be for Europe, because on a year-over-year basis, we've been pretty high, and I know it's pulled back quite a bit. I also know that we're not through the energy crisis over in Europe because we haven't solved the problem. In 2022, this last winter, or I should say this winter, they've refilled their inventory with Russian natural gas for a portion of it. Now it's going to be completely sustained off of liquefied natural gas. Now keep in mind, they filled that up by outbidding other areas, by having China on lockdown and XYZ going on. I think that the bidding for liquefied natural gas is going to be more intense. And I think that it's going to raise the natural gas price of Henry Hub. So I think natural gas, Henry Hub in America is a solid bet going in 2023. and that's the reason why. I also think that oil is going to be a good bet as well, as we had a lot of factors coming together with I'll call it a confluence of factors in 2022 to actually make the price not as bullish. We had SPR releases, we had China on lockdown, and we've got Russia that was still pumping quite dramatically. Now that we've got the Western energy service companies out of Russia, now we've got China reopening, and if we have SPR releases stop, I think that worldwide demand will be good, and I think that we're low in oil at the beginning of this, or at the beginning of 2023. Oil is low right now, so I do think we have good potential upside in oil and natural gas based off where the prices are at the end of 22, beginning of 23, and where we could be at the end of 2023. So I think those are solid bets. I think uranium could be a very good bet. We're seeing the patterns in uranium really squeeze up to the corner there for a whole bunch of different uranium companies. So I do think where we are today, getting through this consolidation and then having a potential run in 2023 is probably pretty likely. So I like the energy sector still. I also think that platinum could do incredibly well. We're getting momentum here in the beginning of 2022, or end of 2022, beginning of 2023. The momentum's to the upside. So I think platinum could be another scorcher for next year, along with silver. So all of those could do very well over the next year, in my opinion. Here's platinum. Speaking of platinum, platinum taking a lead up from big low is usually a good sign for the rest of the precious metals complex. And what he's got here is kind of that shoulder, head, shoulder, and then there's your neckline, and that we're breaking through right now, trying to break out of that neckline. The size of this is from the bottom to the neckline, and then you project it from the neckline up. It's going to be a pretty big move. So if you were to add that up, just kind of roughly speaking, $250. So we could get up to, $1,300 on platinum using just what he's got here off the top of my head. Here is from Wall Street. We're talking about market balances in a lot of base metals. Copper, zinc, aluminum, tin, and lead inventories are at historic lows in the London Metal Exchange warehouses. ESG policies have the long-term impact of restricting development of these critical metals, which make our economy function. Without them, we go back to the 1800s. And it says LME ends chaotic year with metal stockpiles perilously low. Readily available warehouse inventories plunged 66% in 2022. All key LME metals, except nickel, are poised for annual decline. Now, you could choose these metals, and I think they're all going to have a great year. It's tough to figure out what is going to be an outperformer next year, because I think everything's going to perform quite well for commodities. So I'm remaining long in the base metals. I'm using it through diversified mining companies, the ones that pay the big dividends. Some of the other ones, I'm being a little bit more selective. I'd say I've got the royalty companies. I've got some miners in silver. I don't really have anything in platinum. I'm more just playing physical metals. Big physical metals believer, I should say, in gold, silver, and platinum. Platinum and silver being my largest holdings. So that's kind of how I'm playing it there. This is another one on crude oil, why I think crude oil is going to do incredibly well over the next few years. This is crude oil, including the strategic petroleum reserves, plus gasoline, plus distillates. And you can see the 2022, if this is the 5-year average in the red line here, you can see we are drawn down if you include the strategic petroleum reserves. Now, the pricing today of oil does not include the strategic petroleum reserve drawdown. What they're doing is they're just looking at commercial inventories. Now, if this SPR was not included, you would have seen a gigantic draw, just like you see here, versus the 5-year average. You get this large gap. But since they don't include it and they just look at commercial inventory levels and they're including this as extra supply, the prices remained quite low. But when that Strategic Petroleum Reserve gets cut off, we're going to see, I think, inventory drawdowns. Those drawdowns will have an impact on pricing of oil, and we'll see if they do any more releases or if we're going to get a big run out of oil. That's what I think is going to happen, is a big run. But again, I don't know what they're going to do with the Strategic Petroleum Reserve. They could always drain that thing to basically nothing. So here's Russian exports finally trailing off. Happy New Year, kids. And remember, gamblers trade flat prices. Or gamblers trade flat price, traders trade differentials. So here's Russian seaborne exports. You can see this thing is declining quite rapidly. That is what I was talking about, Western energy service companies leaving. They might have pumped it a little bit to sell before any sort of price cap, whatever is going on. But it is declining. And this is going to get real interesting here coming up. Here's another one. It says, major portfolio rebalancing likely ahead. Positioning for U.S. Treasuries is extremely bearish again. Last time this happened ended up being a great buying opportunity. This is non-commercial positions. But this actually bounced in 2018 as it came back up. Are we going to bounce here? Are we going to get it? I don't know. But he's saying it's actually a great opportunity to potentially be buying bonds down here because we've had such a poor performance. And if that was from the stimulus money, the inflation, bonds might be a good pickup if we see a disinflationary environment, which I think we potentially could. So that's that there. Here's another one. It says, the world just doesn't have enough planes as travel roars back. Jefferies estimates there's an order backlog of 12,720 jets. Shortage means fares to remain elevated for foreseeable future. That's crazy. A backlog of 12,720 jets. How many jets? I don't even know how many jets we have flying around. And it's got to be incredible because if you go to some of those, we'll call it the websites, and you see all the jets flying around the world, it is crazy how many jets there are. I'm still kind of flabbergasted by it. Here's gold's killer chart. Don't take your eyes off of it. If it breaks down, it's go time. So what he's got here is the S&P 500 against gold priced in dollars. We have a bearish rising wedge in the ratio. And I agree with him. I think this is going to break to the downside where gold is going to outperform the S&P 500. If we see that, we could see gold do some pretty cool stuff. And in general, all precious metals. We also see that platinum and silver are outperforming gold. And that happens usually when these things go down, like 2000 to 2011. Platinum and silver did very well. I think we're going to see another outperformance of those, we'll call it the smaller guy metals. And I think the big boy gold's going to follow with it. So I do think that we're going to see an outperformance of gold versus S&P 500. Here's Uselink Platinum. Platinum looks absolutely rockety here. Remember, Platinum is a setup for massive gains in 2023. There's no option that silver does not follow suit, or other metals for that matter. And what he did is he took the last bull market, took that fractal of the last bull market here. He took the fractal here, and then he projected it over, and he thinks that we're about where it says you are here. We're coming back up, and here we are. If we were to repeat the last bull market, this is what it could look like. And we could already be in motion and in momentum for a very good next few 5 years, 6 years, 7 years, depending on how long this bull market lasts. So that's what it could be. Now, I'm not projecting that. I do think platinum very well could outperform a lot of other things in the market. I'm heavily invested in it. And I'll be honest, guys, I don't really like, I position in the undervalued assets and I sit in it, and I'm not too worried about what this path looks like and the time frame. As long as it happens within the next 5, 6, 7 years, I'll be fine. So I'm pretty patient. And remember, as things go up, that just means I'm probably not going to be buying and putting my money towards these assets anymore, because your risk reward becomes worse as this goes higher and higher. But I've bought all I could with physical metals, platinum and silver, when they were very cheap from a ratio perspective, on a cost curve perspective, and I've been sitting in them for a good, I'd say about since 2018 is when I really upped my percentages to it. So I've been waiting for this, and I'm ready for the move. And whatever this thing does and whatever it returns is what I'll get. So that's looking pretty good. Now here's something else too. This is for the first time since I've been following precious metals closely. A metals entering first notice with more open interest than inventory available. Platinum open interest stands at 141,000 ounces compared to the NYMEX stocks of 135,000 ounces, with 79,000 ounces of that registered. So I'm not sure what happens if that open interest remains open and they want to take delivery of more metal than what's on the NYMEX. So this is why I'm in it, and I want to find out what happens. And I don't think price is going to go lower. I think it's going to go up, and we could see a platinum squeeze. We could. Here's iron ore is rising because China is collapsing and falling apart right now. Few understand this. Nice big move in iron ore there, and this is on a daily basis, but it's looking good. Nice strong move there. But that's what I've got for today, guys. I just kind of want to go over some of the price performance of 2022. I put a little bit of my expectations for 2023. I do think commodities will do incredibly well in 2023 in general. Picking which one's going to be the best one, it's probably my favorites with the momentum. Platinum's looking really good. I also think that where we are positioned today and where we could be in 2023 at the end, I think natural gas could do very well. I think oil could do very well. And those are kind of my favorites. So, and energy service companies are going to do incredibly well as well. But if you guys want to know kind of how I'm playing it in the companies I've got, you can sign up to the website. And that's all I've got for today, guys. So thumb up for the content, subscribe to the channel, and we'll catch you next time. This is Finding Value.